Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, April the 2nd. Dow Jones up 74, almost 75 points. NASDAQ up 69, S&P up 13, and the Russell up 15. And that's all due to the good ISM numbers. Well, at least they were relatively good, to say the least. Some of them a little bit shy about what they're expecting, but nonetheless, a positive number, still showing an expansion in the economy, so markets liked it, and risk on trade is alive and well. Sure enough, we did actually make new highs in the ES electronic session, and of course the open outcry, as well as the cash. So markets did very, very well yesterday, and there's some interesting developments in the sectors which I'm going to show you, which I'm really starting to get excited about. We also have some good movement in the emerging markets, as you can see here. I'm going to get right into the charts. I have a lot to talk about. No indicators today. Nothing really has changed, so I don't like to dwell on something that hasn't really moved. We're still showing some mixed signals, but yesterday is a decent development. So we're going to see. Let's just go right into the charts. The EEM, Emerging Market ETF, as you can see, exploded the last 5-6 days, giving us a risk-on environment. The emerging market currencies are actually doing very, very well. So good sign as far as risk. So that I like to see. We also have the TLT now bonds, which broke out, if you remember, now actually sold off pretty hard and now is clinging, or I believe it's actually below the 200-day moving average. So this is also a good sign where bonds, money's coming back out of bonds and into equities. So we have this massive rotation of dollars going in from one sector to another. And as long as it stays in the market, there's nothing wrong with that at all, which actually gives you a stock picker's environment. So remember that. If you're looking to trade, or if you are trading, it is a stock picker's market, so you need to find out where the money flow is. Anyway, so TLT looking good if you are a bull, and we have the spiders here. Now, here's the thing of what a little bit of a concern of mine. Some indices have rallied up to the 20-day moving average, which all it is just basically a bear flag, where a couple of key indices have pushed through their 20-day moving average, which is what I want to see. Now, as you can see, the spiders, which is one of the laggards of the 5 that we follow, is now above it. So that's also a very good sign. We also made new intraday all-time highs. That's also a good sign, showing us that people are now engaging in risk, right? We had, in the last several days, we've had eager sellers coming in at these lofty levels, and sure enough, now we have broken past the 1272 Fibonacci extension that I've been showing you for the last several weeks now. So now that actually acts as support, and then we shall see what the next extension would be the 1618. But I don't have that today. I just want to show you that the next area, really the next target would be the 190-150, would be right up in this upper end of this trend line. So interesting to see if we're going to get there. Now remember, we unwound that overbought reading in our momentum oscillators, which is stochastics and MACD, which is good. The only thing I don't like is that volume was okay, but it was pretty consistent for the last 3 days going up. I'd like to see higher volume, something like this, versus the distribution days that we have. So that is a concern, but nonetheless, we are breaking out above the 20-day. The best part about this scenario is the transportation sector, the IYT ETF. Big volume, accumulation day, finally woke up and now surpassed the 20-day moving average. Now, we are challenging the high here, as you can see. Easily challenging the high. Now, if this breaks to the upside, this will bode well for stocks, and obviously we are looking, next area would be to challenge this upper end of this channel, this uptrend channel. So very good development in the transportation sector. And also, if you are looking for something to start accumulating, transportation sector would be a good area. Dial it down in DF. I like UPS, and I like FedEx. Now FedEx has gotten clobbered the last probably 8-9 trading days because of their earnings, but I think it's a great buy at these areas, and I definitely like UPS and FedEx in the transportation sector. Now, the Russell. A little bit concerning. It is below and just really flagging into the lower end of the trend line, which is now acting as resistance, and it is below the 20-day moving average. So let's see if risk could come back on. We are getting a little bit of a turn up. I like to see this get back above 20 in the stochastics, and I like to see this MACD start crossing. We are making a higher low from the MACD histogram, and again, volume was okay. So let's see if we can get back above this thing today. We are trading higher in the pre-market session. Nothing big, up 2.5, 3 handles in the ES. But let's see if we can get back above. If we can get back above it, we can actually get some risk on in the Russell. That's going to help equities push higher. Now remember, we have ADP coming out. We have also non-farm payrolls that are coming out on Friday, which that will trump the charts. So anything that you see and you like, and if they don't like the non-farm payroll number, meaning the market participants, then all bets are off to the upside. So that's why it's going to be tricky. Aside from today, and if we get some good follow-through today, Thursday and Friday is going to be a little tricky as far as trading. That's why keeping the book light and just making your singles and doubles, and that's what's going to happen until this market could at least correct. I mean, we haven't had a correction, guys, in a long, long time. We haven't had a 10% correction, and I believe over 3 years. So that's something that really this market is in dire straits of. We are fairly valued here, so there's nothing great about buying stocks at the moment. But unfortunately, we're riding that greed train with Janet Yellen, the Fed chair, continually pumping money, and now they are tapering, right? But 10 billion here, 10 billion there is nothing for what they're putting liquidity into the marketplace. Now let's take a look at the Qs. Qs did well, but again, below the 20-day moving average. Finally, it got back above the 50. So let's see if this thing could muster up some movement to the upside. Big cap tech is still a little sluggish, but we are seeing big rotation going into, again, some of the transportation sector. And remember, I mentioned banks, solars, which alternative energy, and of course energy. Energy is a big driver. We're going to get into that as well. And also, we had some consumer discretionary stocks and the ETF start leading yesterday. That's also a good sign. We're going into spring, and a lot of these retailers do well. So if that's another trade idea for you, keep an eye on some of those retailing stocks. Okay, back to the index. Diamonds, again, above the 20, above the 50, doing well. But it is a laggard, and it's testing this short-term high here. If that breaks out, we should really start to break out and start to move higher, as well as all of the indices as a whole. Okay, XLF. So a little sluggish. It needs to wake up a little bit, but I like the bank sector here. And you got to pick your spots with the bank sector, right? Morgan Stanley, I do like. It's just basically at the 20-day moving average. I wouldn't do anything here yet, but it is buying back its shares and raising its dividend. Nothing great, but it's probably one of the better stocks. Now, if Morgan Stanley can get above 31.90, you see the volume profiles here. We get back above it, then it's going to be easy to get back way above, at least challenge these highs, and that would be your first target. So I do like Morgan Stanley, but it needs to get going a little bit. I like to see it above the 20 and base a little bit more and then break out. But keep an eye on Morgan Stanley. It's one of the better financials. Citibank, as the reference to the bank stocks, very sluggish here. Failed the test, the stress test. So I'd stay away from it a little bit. It really needs to break back and fill a little bit more before it starts to move higher. So right now I'm going to take that off the watch list. I like Goldman. Goldman needs to get back above 167.25 and then base a little bit. I like to see bases in Goldman Sachs. You can see here we sold off, we based, and then we rallied for at least several months. Sold off, base, and then rallied. So if it could get back above 167, kind of base around, even if it's back around 65.5, 67 base, and then rally, we'll at least challenge the first short-term high, and then of course the high here at 181.11. So I do like Goldman. Now, one of my favorites is the energy play. Now, crude oil took it on the chin yesterday, down 14 cents this morning in the pre-market session, but I still like oil. The oil stocks, when they start to go, you're going to see oil really start to explode, and that's going to be the oil trade that we're going to be looking for. As of right now, a lot of these stocks are starting to really take off, so they're a little bit extended. But what I do like here is Apache. I like the APA, really, really looking good. And NOV, another one, NOV, another one of my favorite. If you can see here, really Blast took a really big big move higher. Now let's wait for a pullback in NOV and APA. Like I said, I'll bring that up one more time. It has not really moved, but you could see here now we're coming into this area of resistance, which it might cap it a little bit, but a nice flag into this area here, this next support area. I would look to buy it. Easy to manage. You'll be below that previous low here, but so I do like APA on an intraday basis, and definitely for a longer term play. All right, now the home builders seasonality starts to pick up steam. We're coming into spring. As you can see, we had 3 big days up in the XHB, the home building ETF, home construction. Now it's breaking this bearish symmetry. I do like the home construction. Let's keep an eye on getting back above the 50-day moving average, chopping around. So home construction doing well. And look at Lennar. Now you see here, this is same thing with the XHB. You can see how it is now breaking bearish symmetry here, and just barely above the 20. I like to see it chop around a little bit more, and then we could get it to Lennar, one of my favorite, if not the favorite home builder. Toll Brothers, the same thing, as you can see here, and then of course Pulte Homes. Pulte, a little bit more work it needs to do. I'd like to see, now not just up 4 days, I wouldn't buy it up 4 days, but I'd like to see it kind of base above here, kind of chop around, and then break out and at least challenge for the next target would be challenging the highs here. So home builders looking good, definitely energy play, and of course the solars, which we were looking at. Now, I'm not telling you I wouldn't be asking to buy First Solar up here. I need a deeper pullback in First Solar, but just to show you how phenomenal this trade was, and it just, you know what, if you weren't in it, you just missed it because it just exploded up here. But again, very shallow pullback, meaning that the stock is being bid up. So there's a high demand for it. Look at Trina Solar. Trina Solar. Now again, it's doing nothing wrong, but it's all it is testing is flagging into the 20 and the 50-day moving average. Now stocks like this, they do happen to gap up and then they run. So watch the Trina Solar for a bigger play here. But yeah, I do like it. It was well bid up. I like also SUNE. That's also another great looking chart. This is actually a much better chart, above the 20, above the 50, and again, I would look for an entry in here for a test of the highs. And we have TAN is just the ETF that I wanted to show you. As you can see here, above the 20, plenty of room to run to the upside. So TAN looking pretty good, looking pretty constructive. Here's the XLE, just showing you where we had, I was mentioning, I had a few emails when I said, oh, you know, bearish rising wedge, it's breaking down. Why wouldn't you want to short it? And I said, I don't want to short it because there's a big demand for energy stocks. Even though we had that, even though it did trigger, that's why if you take the first trigger off of the first signal off of the bearish rising wedge, you got to take it as a scalp trade, you know, at least a day or two. And then what you really want to do is wait for the back test and fail. Then we have a definitive trend which is going to be lower. But what that back test failed told me that we are now looking for that XLE was looking for another move higher here. Okay, and then of course we had Apple. Apple doing okay here. I like Apple here, and you know, selling either a put credit spread or buying some options. I do like Apple for at least a test of the 550 area. Okay, Intel. Just want to show you Intel. Some of the old school tech doing pretty well here. Intel starting to break out higher now. Again, you don't want to chase this up 5, 6, 7 days, guys. You want to let this thing flag a little bit and let this market pull in a little bit. You want to be a little patient here. Okay, and lastly is the USO. Now, again, we actually, it took it on the chin yesterday, no problem. And again, it's going to affect, non-farm payroll numbers should affect pretty much everything across the board. But watch crude oil for signal for a bigger move to the upside. Okay, we have oil stocks moving, oil services moving. You have the drillers moving, so that's going to bode well for crude oil. So that's telling me that you know, I'm looking to start building a position in crude. Again, not ready yet. Not looking to catch a falling knife. But remember, guys, any type of basing pattern, breakout of a base pattern, is what you want to start getting involved in. Okay. All right, guys. Hope that helps today. And remember, Thursdays ADP, Fridays non-farm payroll numbers. So I think if we can get a nice push today. I think it's going to start tapering off going into non-farm payroll numbers, okay? So heads up, use your stops, and we will talk to you tomorrow. Have a great day, everybody.